The IPO market really in the headlines right now over the last several weeks between all of the headlines with WeWork, at the very least delaying its IPO, Peloton going public last week. What do you think all of these headlines say about where we are this year with IPOs when it's been such a big year for a lot of big debuts, but you know, it hasn't all been super stellar what we've seen so far?
Yeah, definitely not the rosiest picture across the board. In terms of key themes, I would say primarily this has been a year where those sort of decade plus, Silicon Valley backed unicorns finally really just started to open up the gates and going public, we saw Uber, we saw Lyft, we saw Slack, a few others, and those were obviously highly anticipated IPOs, and this is, I think, the first year where we really started seeing a lot of these kind of decacorns going public, and not as many left as we look forward into the next year. Another key theme, I think, is what you alluded to, is exactly that there's been uneven performance throughout the IPO market. I would say, what you would historically consider to be software, enterprise software, SaaS, those businesses are, I would say, still performing quite well in the IPO markets. You've seen some, sideways trading or trading down from companies like Slack, but you have Cloudflare, you have Zoom Video Communications doing really well, Datadog, all of those companies still trading, above their IPO prices. Obviously Uber, Lyft have been trading a bit differently, but they're very different businesses. I think they've been characterized as tech companies, and to a certain extent they are, and they leverage technology, but they do not have the kind of software margins you'll see, 80% gross margins, they're more at the 40% gross margin level. So they're very different businesses, and I think public markets investors are reacting differently as a result.